I had a client that had rental real estate. They had it for many years, so they had the capital. They'd replaced everything. It was great. It was just a cash flow. And they were depreciating it, so they had on-paper losses. They had paper losses, but they didn't get to deduct them many years because their income was too high. Well, then they sold the property. And the great news, when you sell a piece of real estate, you get to deduct all of the accumulated passive losses. They're called passive losses that have accumulated. They had a huge loss, very little income. Their tax return, they would have ended up with 0 tax on their tax return. Doesn't that sound awesome? No tax whatsoever. However, I said, you have an IRA. If you have an IRA, you have no business having 0 tax on your tax return, because you can just say, we moved that IRA over $100,000 into her Roth IRA. We'll talk about Roths in a bit, which grew tax-free for their entire lifetime at a 10% tax cost. If we hadn't done that, that loss would have been wasted. They would have saved no tax. They would have paid no tax, but they wouldn't have offset any income with it. And someday she would have been taxed on that IRA at whatever tax rate she was in at the time that came out, probably a much higher rate. There's moves like that during retirement that can save you a boatload of taxes.